calculate what to pick your brain. But you have also achieved quite an impressive list of things. For example, as a CMO capacity, you have built essentially from starting from $0 to a unicorn with 7,000 employees in health tech with just 25 billion marketing spend, which is an amazing accomplishment. But besides that, you've been also working in the VC space, investing in startups for a while, and have for a while been angel investing through a BADideas.fund. And now you're really great at supporting founders, whether that's product strategy or positioning or brand or starting off with marketing and optimization on budgets. Am I missing something on the background? Tell me about yourself.
Oh, well, thanks, Raymond. I mean, most of my career, Curative, the company that I built a couple of years ago, and really was my baby, and helping to build and grow with my colleagues. That was really the only U.S. company I'd ever worked for. So all of my work has been international for my career. So it's the one company that was U.S. based. So I work most of my time in China and in Asia more broadly, and then I really love spending time and effort on companies coming out of the Baltics and Central Eastern Europe, because of people like you and so many of the Bad Ideas members that have just been really great thought partners and peers, I would say, in their interests and efforts to both support early stage companies and also just bring in really different perspectives from both the technical side, from the business operator side. So it's been really synergistic for me to both bring some experiences from other regions and building in healthcare and health tech, and then also just working with really great, curious, excited minds around the IC and around the community, really more broadly. Had great conversations.
Yeah, how many have you done accounts? How many investments have you been part of in startups? And whether that's through Bad Ideas Fund or overall.
I feel like you probably know better for me how many in Bad Ideas Funds. I don't know the exact number, but I would say I probably have about between 15 and 20 angel investments. Some of them are strictly financial investments, and others are investments in people that I really think are amazing minds, and I want to support them and their art and their creativity. So I've helped to executive produce a film, and so I think of that as kind of in the angel investment bucket. Some startups that are really focused on building arts and community and ways in which they can create business models to further their goal of connecting people or nature. So not all of them look like a B2B SaaS company, doing some kind of software system for the back-end operations of the HR team or something. It really spans the gamut. And I think of it as a way to really diversify my portfolio in the ways in which I put money into things I care about, and also hopefully, in some of them at least, have some returns later down the line. As I continue to figure out where I want to put money to work. And also it's really fun for me. I really love connecting with founders. I love hearing what they're working on, how they're approaching it, how they're looking to solve problems. And, when I'm able to connect with them, especially at the very earliest stage, I get to have a really great front seat at what they're working on. And I learn so much more, so that the companies that I work in or operate or invest in other areas of my work, which my day job is basically in investing and advising companies as well. Just my whole world kind of sits on both sides of these tables of investing and advising companies. It brings a really dynamic part to me of being able to work with super early stage founders out of CEE and the Bad Ideas funds, that I can translate into some of the other work I do in deep tech or healthcare.
Nice. So you're talking about startup investing like it's obvious that everyone should be doing it. Like, what are you doing out of all things you could be doing in life? And how did it start? What was the trigger?
Oh, it's so funny you say that, because it does seem so obvious to me. Although I will say, investing in startups is not for everyone, right? It's a whole risk profile. So I always say, it's like, I don't give any investment advice. Like, these are all things that I do with no advice from other people. It's what feels right to me, both from investing in companies and how I think about my own, financial health, I suppose. But it started off, with a dear mutual friend who was the first person I had ever met years ago, who was kind of like us, investing and advising and an entrepreneur, and had this whole world that I had never seen before. And I was very much like a 9 to 5 corporate person. And when I saw this world of, wow, I can kind of jump into companies, I can help them, I can see what happens, I can spread risk around my own, financial upside in various different companies. It was intoxicating to me to just have the possibility of doing good or making, this product come to light to solve problems. And that was that feedback loop of problem solution. How do we make it happen? What are all of the different factors that make a company successful? Which, there's so many, and we talk about them a lot, behind the curtain or in the back room of business models and such. But yeah, I mean, once I started to see that problem solution and feedback, that I just couldn't stay away. I will say, there's other areas that I invest in besides startups and real estate and securities and equities and those sorts of things. But the most fun, for sure, is working with real people who have a baby, which is their startup, that they want to, put into the world and see it excel.
Okay. But investing in startups, is that only for passion, or do you see there's a chance to see returns as well? Or from what you've seen, your like network around who are longer time in the asset class?
Yeah, I mean, so my day job is working in investing as well. So I work part-time for a biotech or deep tech investment fund out of the US. And so I work on deals in China. And those are slightly different. These are really in deep tech. So we're talking about nanomaterials and life sciences, some quantum computing, these sorts of things. And so we do that a little bit differently than I view my own angel investing. So I would say angel investing is my hobby and my passion, but also I do think that there'll be, opportunities to have financial returns on it. I think if that was the only reason, it wouldn't be good enough. I think the joy that I get from it is really the part that is really exciting, and I learn so much. But the companies that I've been working with, I mean, I started angel investing about 3 years ago, I guess. We're already starting to see some things happen. A couple of them have failed, and that's the nature of the asset class. Some of them have returned capital. And, some of them are continuing to raise. And, in the next couple of years, I look forward to seeing, the M&A activity and the sales that they're able to come through with. But I think, for me and Ryman's, I know we've talked about this before, there's a couple of different schools of thought on it. And it really depends on how much capital and time really you have to put to work on it. But, diversifying your own risk and the types of companies that you invest in, both geographically, both, in the types of solutions or sales channels that they have, is something I think about a lot in building my own portfolio. I'm not going to just invest in 20 femtech companies, for example. Like that to me would be too high risk. But I'd like to invest in a femtech company and a logistics company and a tax accounting software company. These things to kind of and I say that just hypothetically, but to diversify the kinds of risks, the teams, and the areas that they're going into to solve problems.
Very good. Okay. 15, 20 companies done. You have your mindset and learnings right now, and you were starting off with 0 investments. How is Miranda 3 years ago, Miranda right now? What have you learned? What are those insights?
Oh my gosh, so many. I think that. Yeah, I've learned so many things. I think, one, it was a really good way to learn the jargon. I was trained in public health. I came from very much not the business background. I have this joke, I guess, which in college, I didn't even know anyone who studied business. Like I didn't really, like that was just not my world. Business was not my world at all. I came from like a very different background. And so learning the jargon, of safes and convertible notes and rounds and all of the different kind of pieces of what goes into the financing of these startups, not to mention all of the intricacies and nuances of the specific company and their business model and how they look to work and grow. I've learned a lot about that. And I think the only way to do it is by getting in there. And so, the way I thought of it when I was starting off was I basically gave myself a pool of money to just learn. Like that was my learning ground. And I have no idea, how it's going to play out over the course of 10 years. Like maybe those early ones will be great. Maybe the later ones will be great because I've learned more. I'm not really sure because there's so many other factors besides just me and, putting some amount of capital to work, depending on the macro and also microeconomic factors and team and et cetera. But I think giving yourself some capital to say, this is what I'm testing with, this is what I'm learning. I want to better understand this type of business, or startups in general. I want to be able to work with founders and have that feedback. And if you look at it like that it's your opportunity to learn and invest in yourself and how you think about investing, I think that's really important. Otherwise, there's other ways if you want exposure to the asset class, which is to become an LP in a fund, which I highly recommend, the Bad Ideas Fund, which Ryman's is working on. And that's a way to say, I'm going to let people who've already put their own capital or other people's capital to work to learn and understand and create these processes. But for me, it was, I learned by doing. And so, putting some, you can think of it as a percentage, you can think of it as a flat dollar amount to say, I'm going to learn, think deeply, and understand how I think about making investments with a pool of capital. So that's how I started. And now I have more of a I guess, process. And that's a lot of by doing deals with you and some other friends. I have a different way of thinking of it now, which is, I'm not experimenting as much. Like I have a perspective usually on the kinds of companies I want to invest in.
Interesting. So you probably went in without thought through process or a process that you have right now. What is your process of investing? What is going through your mind?
It depends on where the deal comes from. I guess when we're looking at companies that come through Bad Ideas, I'm looking at a bunch of different kind of factors as, what do I think the commercialization strategy is like, and how much money do I think that company needs to get from 0 to 0.5 and then 0.5 to 1, and is there really a viable business model that I can see based on the now, probably thousands of companies I've looked at over the past couple of years, how does that business model compare? And do I think that's the right team to be able to do that business model? Is the product viable? Like how close to viable is it? What would product market fit look like to me? Like what would be compelling to me to say, wow, this is really a company that can generate real, opportunity or returns. And, I would say most of the companies I see, I would say like a pretty large percentage are good small businesses. The vast majority, like they're interesting businesses. They're creating good products. They're not unicorns. And that is okay, actually, and that's a really great place for someone to build is a, smaller, medium-sized business that does pretty well. When we're thinking about angel investing though, from the perspective of, we want to find companies that have, 1,000x returns, I'm taking a different perspective. And so sometimes I am interested, not necessarily through Bad Ideas, but sometimes I'm interested in supporting companies that I think could be cash flow. That's one area that I'd be looking at. And I'd have some kind of confidence metric where I think like, wow, that's a really interesting opportunity. And on some of the others, I'm like, that could be a good smaller, medium-sized business, but I'd rather put this capital to work on one that I think is going to either swing for the fences or fail. And that's a kind of a different risk profile. So yeah, I think the more that I can see a founder that is thinking through the logical steps of how it can go and the risks or the headwinds that they may face versus, maybe competition or regulation or, how timing and the way that the world is operating around them interacts with their business. Those are really good signs that I kind of think about as I'm evaluating an investment. But I'd say some people have a very hard and fast rule, like, okay, we only invest in companies that have X amount of customers, X amount of revenue, X. I don't really have that kind of strict framework. I look at each investment, and we're more generalist investors too in Bad Ideas. So I look at each investment on its own, and I pull from the backlog of information I've gathered over the past couple of years to kind of assess threats, opportunities, risks. Yeah.
So there are lots of simultaneous things that you're going through while you're evaluating. Then you're evaluating essentially the upside versus the risk, right? Is that a good sum up?
Totally. Great. Well done.
What are the common misconceptions that you see? What are the things that you thought you had read? Oh, it makes sense when you're going into angel investing, but now in retrospect, not so much.
One of the things in this market, it's a hard market right now, right? It's the capital markets have changed significantly from 3 years ago when I was investing, mostly because of interest rates and the cost of capital now. And I think I hadn't emotionally prepared for some of my companies to fail 3 years ago. I mean, I knew that some of them would, kind of intellectually. I was like, yeah, some of these are going to, like, maybe all of these fail, but I'm learning so much that every single day that I have conversations with companies and am able to wear the hat of saying like, I'm an angel investor. I want to learn about your company. And I just build this network. Like, it's so valuable to me. It makes so much sense for my life. But when I see companies that really just like, they hit the end of the line, it's painful for me too, just because I really wanted them to succeed. And there's so many factors that go into it. So that's one of the things I think I've understood now more. I think the other thing is I don't think that there's any shortcut to this. But the more that you can listen to other investors talk about a specific company or hear their input or, understand kind of how they're coming from, where they're coming from, that connection or collaboration on a company is really helpful. And I will say in the early days of my angel investing, I was doing it just myself. I was evaluating companies, writing checks. I wasn't having deep dialogue. And I will say that doesn't mean I necessarily have people persuade me in or persuade me out of a company, but just hearing someone else evaluate a company and give me their input is really helpful. So just that collaborative community opportunity to connect, and it shapes my thinking, and it makes me much sharper as I understand a company in the context of my own portfolio.
I can only agree with that, and that reminds me of a mistake I did. I didn't introduce what I'm so excited about and so fortunate and so lucky that we have you on board. You are part of the investment team of BADideas.fund. So every week you join a call where we discuss the deal flow, the deals that are coming through, the startup teams that are applying, and we are having these very conversations. So it's amazing to be learning from you, your angle and your thinking, your approach. Very, very interesting. So you said learning a lot, learning to be angel investing. So that's one, but learning also for your own line of work. Do you see that investing as a startup builder or founder while you're building is a good idea, or that's hurting you as a distraction?
It's the gains that I get from seeing other companies while I'm also working on companies myself is super important. It gives me a new input that I just don't think you can get anywhere else. Because you have your own financial, if you're deploying your own capital, it gives you a real sentimental sense of what you want to do with that money. And so, I've been angel investing, the past couple of years while I was also working on companies, and now my time is mostly spent advising and investing. But when I go to build the next company, I will continue to angel invest 100%, because you're keeping track of what's happening in the broader landscape. So you may be going out as a founder or an operator to raise or to find customers or to, whatever it is, wherever you're at in your journey. And if you're continuing to do investments yourself, you're thinking about the business models of others. You're thinking about how these companies are pivoting. You're thinking about the ways in which other operators are solving problems. And that kind of bi-directional feedback and learning from both the way that you operate your own company or advise companies and the way that you put money to work, they're two sides of the table. And ideally they're aligned, right? The interest of the operator and the interest of the investors. That's a great scenario, but they're not always aligned. And so I see it as wearing multiple hats gives you the best opportunity to make the best decisions that you can. And you understand the perspectives of the people sitting on the other side of the table because you yourself wear that hat. And so I think it just makes me a much sharper operator when I'm in a company trying to solve a problem, because I think about the kinds of conversations that we have in the investment committee and what I hear other investors say about a particular company, even if it's not the same company. And then as an investor, and with Bad Ideas, we're so fortunate. We have so many operators and founders, who have real experience building companies. But I'd say, in some of the groups that I work with in investment, they actually haven't run companies. They're purely financial investors who have, banking or investing backgrounds, but haven't had the experience of when your whole team, on the product side or tech team quits, and like, what do you do, or when you have, some kind of fire that happens in the company and someone's asking you questions about, how does this piece of your company work, and they're drilling you, and what you're thinking as an operator is like, holy shit, I'm going to have to make this thing happen tomorrow, in a totally different domain, and there's that distraction. And those dynamics of the fires that you have to fight on the company side versus the kinds of questions and the line of diligence that an investor is doing, appreciating both of those is a great benefit to me.
Couldn't agree more. You mentioned several times portfolio construction. How are you thinking about your personal portfolio? What is important to you? How it has evolved? And for someone who is starting off, how should they be thinking about doing their next investment or per year investment? What's your suggestion?
It's probably beyond my pay grade because I can't give financial advice. But for my own, I think about it in the sense of timing. What is the stage or maturity of the company? What do I think, the steps are that would get them to market and start to get them to break even? So, on some, depending on the company, I'm thinking about, okay, in the context of the rest of my companies, how far away do I think they are from an inflection point, a value inflection point where there could be some kind of liquidity? And some of them are closer than others, or what I think, right? And there's what you would say for your own investment memo, right? There's an investment memo, which the BADideas.fund, will circulate every time. And that's basically, what do we think about this company at this given point in time? And over time, one needs to update, and one meaning the investor needs to update that assessment based on the factors that you get back from the company. And so I think about it as, do I think this is a company that can hit an inflection point in 2 years and 3 years and 10 years? And so timing of the company is one. I think size of the potential return is another. I'm thinking about, there's some companies that, a small investment in them, there's a greater opportunity that they're going to have a really big acquisition because of the importance that I think that company would have in the value chain, versus some of the others. I think it's like, wow, I actually think that they can break even pretty easily. Then they're not going to get to M&A until, 5-7 years down the line. But at that point, that could be really interesting. So I'm constantly assessing and reassessing the model, so to speak, of each company and how it sits in my portfolio. So timing, diversification across industry is really important to me. The type of customers that they're servicing, if we have, for example, the real estate market in the US is super down right now. I wouldn't want all my companies to be in real estate today. I'd want them across multiple industries in areas that have some resilience across market downturns. So a little bit of resiliency as well. And then I think it also in founder mix, right? I'm interested in some companies having who are serial entrepreneurs who I think are really skilled operators, and in others I want to bet on the person and say, wow, you're an exceptional individual with an incredible dream, and I want to support this venture of yours. And if it doesn't work out, let's see how we work together. But if this is someone who I really believe in, who I think is exceptional, they're not always going to hit it out of the park on their first swing. But to watch them grow over time and to become a better operator and a better innovator, that could be a really interesting opportunity to be a partner for them as they grow throughout their career. And so that's one of the other mixes, which really depends on the person and the connection and the way that I think I can support them and support their work.
In addition to that, I'm starting angel investing. Should I do 1, 2, 3 investments or 10 plus investments per year in my first year?
It depends on the kind of capital. Yeah. It depends on the amount of capital you have to put to work and the time that you have to do it. And I would say that diversification is really important in angel investing because, you could be struck by lightning in a good way and, your one investment becomes super successful, but statistically that's not really the case. And so I'd say, I think spreading angel investments across a larger array of companies is super important. And I would say if you really don't know how many you should be doing, being an LP in a fund, so someone can help you to make that decision and to really optimize that is a good way to do it. Otherwise, I think you look at each opportunity and you say, I want to do for your own financial planning, for your own planning of how you want to do this. If it's 1 a quarter, if it's once a month, if it's, but the more that you do it, the more angel investing you do in a rigorous way for yourself of saying, okay, I'm going to sit down, I'm going to read this investment memo, I'm going to come up with a perspective myself as an angel investor of what I think about this company based on the intel that I've gathered. The more you do it, the better the muscle, the stronger the muscle is, the more you have sharper insights and perspectives. And so, I think regularity is really important so that you can contextualize both the timing of the market and what's happening with your own, investment strategy.
Very good. So that implies that you can't really afford to be too selective initially when you're starting out. You want to collect those data points as long as you have access to good deal flow, which is, I guess, the big pre-requirement to have, prerequisite to have. But as long as you have that, then doing quite a few, and then you can already become more selective and analytical, right?
I think that's right. Yeah. And I think in the early days, there's just so much unknown. If this is really, truly your first time sitting on this side of the table, there's so much unknown. And so, if you can feel comfortable and excited about the opportunity and, excited that you're going to learn something. And even if this goes to zero, this company goes to zero, you feel like you personally have learned something. I think it's worthwhile in the early days. The later days, I think it's much more strategic. It's much more, thought out.
What about Bad Ideas Fund? You've been part of Bad Ideas Fund community for quite a while. So what appeals to it there for you, and how do you see we stand out compared to your group syndicates?
I think the talent and the opportunity coming out of the region is super interesting to me. I think you have companies that are coming out with really skilled teams. And they're coming to Bad Ideas Fund and this group of former operators and founders and investors who have really a hold on the region's deal flow. It's like the Bad Ideas Fund is seeing all of the deal flow from the region. I know, Ryman, it's because of you and the team just working to connect with everyone across the region. And so to be able to see all of the deal flow from the investment committee perspective, and then really to help filter and get the best deals coming out of the region to our community I can't underscore it enough. Like, there's so much work that goes into the kinds of deals that the community is seeing. And so that's super interesting to me. And I think that the kinds of companies that we're seeing are really skilled teams who can operate in a global environment, who have valuations that are reasonable and accessible to angel and early stage investors, and have that opportunities in their sights set on industries and technologies that are potentially extremely lucrative. And so that mix of having access to deal flow, which is not a given in the US, that's a very different environment. Access to deal flow is a huge challenge. Bad Ideas Fund, amazing access, really interesting deals, great vetting, extremely detailed processes on the back end. Like, I haven't worked with a syndicate that's nearly as structured and organized as Ryman's and the team. And so that's been really exciting to work with and see that evolve. And also just to be really close to the community, being able to pop in and, I use the community liberally, which is, asking for recommendations on operators or contacts that people have worked with in the region that I'm trying to plug in with my own portfolio companies or, advisory clients. And so that community aspect is super, super helpful, just as someone who's also sitting on the other side of the table, not just on the investment side.
Awesome. Now let's take a look in the future. What are you most excited about? Where tech is going? Where health tech, for example, what you are very much involved in and have passion for, where is it going in the next couple of years?
I'm super excited about where we're going, particularly in healthcare and personalization, and the ways in which healthcare can, and it's different in Europe as it is in the US, which I can't underscore enough, but in healthcare specifically, I think there's a real opportunity to create personalization in the ways that we've seen in tech products. You sign on and work with some of these software technologies, and it's so smooth. It's just, the experience is exceptional. And I think that's an area of healthcare that there's a real opportunity to just create a way in which Miranda or Ryman's or someone has the experience that's curated to them based on their unique identifiers or health inputs. And we're starting to see that in a lot of different kind of disjointed ways, but the opportunity to merge those in a way, where your blood testing and your heart rate monitoring and your doctor's assessment and the way that AI overlays all of those components helps to curate a unique and personalized experience for you on both qualitative and quantitative metrics is an incredible opportunity for me. And I think we will become healthier and just have, the longevity opportunity we have by integrating all of those pieces is going to be super exciting. And that's more on the health tech side. There's a lot of stuff on the biotech side that I think is exciting too. But the experience of someone going through their life in harmony with healthcare is where there's massive optimizations possible.
From your side, that's a buy verdict on Apple stock.
I don't know if it's just Apple. I think it's like, I think there's a lot of different ways, and there's a lot of different ways and places where that personalization and harmonization can happen. It's not just in your iPhone. It's in the way that you even have an experience with your doctor, the way that data is shared, the way that the doctor is able to share information with you, the analytics that you're able to see. So I don't know if it's just one super app. It's in all of the touch points that we would have with healthcare, which is both, in the hardware systems that we use, like how can we better integrate them with our lives? In the software systems that are, powering the back end, how can we make them more interoperable and have, better user experience? Like literal UI UX is still lagging in healthcare in ways that tech has just, you don't even think about it, but it's so smooth. Some of the ways that we do transactions or input data or visualize data in a lot of other places. So those are exciting opportunities. And I think that the more information that we're able to gather for an individual that is able to follow them over time in the same way that we would do with a tech product, in other domains of being able to really have multivariate, kind of data is a really exciting opportunity. And there's not a monopoly on it, which is what I think is really exciting too, is because it's such a broad space. In other areas, I'm excited about.
It's just, I could be talking to you for hours and get the best out of it. I just love, I'm enjoying every minute, every second. And that's why I'm looking forward every week to have a chat with you on our investment calls. It's been such a great conversation, and that's why we're over time with so many great topics. Any parting words of wisdom or advice to aspiring young startup investors?
I would say approach everything with curiosity and knowing that there's a lot more that you don't know than you know. And that's a great place to be, to just get curious, get excited about what you can learn yourself and the ways that you can support, other aspiring founders and entrepreneurs to learn and to grow themselves. And it's really the symbiotic relationship that we can have as a community to support each other and to just get better at what we do and the problems that we solve. So curiosity is key, and to be excited to learn and to work with others. It's a community effort for sure.
You can be of exceptional help to founders, startup builders in the fractional CMO capacity that you are doing lately. Where can people find you?
Yeah, I have a little consultancy that I run called Healthy CMO. It's really focused on health and wellness, early stage startups, so seed to maybe Series B, seed and Series A. Healthycmo.com, or find me on LinkedIn. I love chatting with entrepreneurs and connecting dots and just getting excited to hear what people are working on and how we can solve problems together. So healthycmo.com or LinkedIn, Miranda Gottlieb is really my best channel to connect and talk more about ways that we can collaborate.
Awesome. Thanks, Miranda. That's a wrap.
Thanks, Raymond.